And welcome back to our Market Day Report. Mark Oppold, as we work through this Crop Progress Tuesday. Before we get to Chicago, just a couple of things I want to pass on to you as far as our conditions are concerned. Let's take a drive across Interstate 80, Nebraska, through Iowa, Illinois. You go across that belt from west to east and cover a lot of ground here. Here's our corn condition. Not a lot of change in here, and that's one of the reasons most were expecting at least 1 or maybe 2% decline. But again, Nebraska was unchanged and near 80%, as Iowa. Illinois 75, Indiana 72, and Ohio 64% rated good to excellent. Go back and take that same truck across Interstate 80 and look at soybean fields, what their condition is. A little bit lower in that eastern belt. That's where you kind of want to focus on. The Indiana conditions dropped 3% from last week. Ohio dropping 4%. And that's one area to watch, is that eastern corn belt as far as the moisture coming up and where we are right now. To Chicago, then we go. Todd Horwitz live from Chicago. And Todd, with the pullback we've seen here, we talked a lot about fear, hope, and greed, and that's what you try to eliminate, all that, and just take the emotion out of the market with a great marketing plan. But this is a great example of what we've come through.
Good morning, Mark. And yeah, it is. It becomes the world, we're all in it for one reason, to make money, whether
Sure.
you're farming, whatever you're doing. So you have to be careful when you see moves that are really done through illogical reasons or based on some news report. We all know what happens when news comes out. Eventually, either it's been anticipated correctly and it goes the opposite way you think it's going to go, or they underestimated it. We get one explosion and then it stops anyways, because eventually true free markets will come out and determine what the real fair price is. So the important thing is when markets get a little crazy or get a little out of whack, for example, right now, over the last couple of weeks, soybeans and corn got a little bit pricey, and I thought that it was a great spot to either take some profit out or to at least hedge. I always believe in hedging because I don't like to get out. I like to hold as long as I can because I believe that they're going to go higher over the longer term here. So I'd rather figure out a way to stay in so I can benefit from that next big move. But we know and expect sell-offs. They happen all the time. But what does happen is human emotion comes into play. And of course, we forget all the fundamentals that we got to protect ourselves, and we get a little bit crazy and we start buying, and of course that drives the speculators, and that's where we end up running into a problem. We forget to take care of our original marketing plan, which is we're in the business to make money. Let's ensure we protect those profits at every rally. So as we stair step higher, let's continue to move up our futures basis, because we're only worried about the futures basis until we sell. Then we're worried about the cash basis.
Very good. Yeah, all that information and a lot more for our viewers and listeners available at BubbaTrading.com. And as you've said many times before, a lot of times this market may take the stair steps higher, but take the elevator down. Likely, what do you think about overselling this thing now, the downside, Todd?
I think you'll probably see that. Now, again, as I came up here, corn seemed to be still in pretty good pressure. It was down about 14 cents when I walked up the stairs. Soybeans seem to be trying to make a little bit of a rally, and we're down, I think, 5 or 6 cents when I got up here. I think that you're going to see fairly significantly lower prices. When I mean significant, I think corn will go back into maybe the 390 area. That's where I'm looking. I think soybeans will go back under 11. Now, again, I don't want to panic. I don't want anybody to get nervous here. What I'm saying is that would be a natural progression, because especially in the commodity space, they always go farther up than you think they're going to go, and they always go farther down, because you have to deal with that last bit of usually either greed to the upside or fear to the downside. So remember that happens, and think to yourself about the emotion you're feeling, and then hold it back and know that you're hedged. You don't have to worry about it.
Very good. Todd Horwitz live from Chicago. Todd will take a break, come back. I'll check that livestock trade with you, trying to get a base in there, it appears. I'm going to get your thoughts. And we'll do that in 1 minute. Be right back. Market Day Report. We are 10 minutes to the top of the hour. Let's go back to Chicago. Interested to get thoughts from our good friend Todd Horwitz, with us each week here on Market Day Report. Bubba Trading, it's BubbaTrading.com. And you talked about the grain trade going higher than many thought it should, going down lower maybe than people think it should at this time of the year. A year or so ago, a couple of years ago, we looked at cattle prices, and now sit where we are now. Are we lower than we should be in the cattle trade now?
Mark, I think that we are. Again, I can't, obviously you can never pick the absolute top or the absolute bottom, but I did tell you last week that I did buy a little bit. I pay a little bit more than they are trading right now, and I'm willing to buy more here. I think, you know, from a trading standpoint, my side, you know, I'll accumulate a little bit to buy. Now, from a producer standpoint or a farmer, you know, I'm still like them. I mean, again, this is where the hedging model comes in, but I believe you're going to find a bottom here, and what I've been really on the last couple of days is what's going on in the cash market. Now, we're not trading cash right now, but I want to know when the cash market really pukes out and loses it like they did about a month ago, that's when I expect to see a bounce. But I would not be surprised at any stage here, 110 or a little bit below in the fats, and, you know, the 133, 134 level in the feeders. To me, that's a great level to start, and I would think that I'm certainly a buyer. I'm stepping with, you know, my own money, so I am buying in here, and I think this is a good area to buy because I think you've got very little downside. You know, as we talk about when the prices were so high, high prices will cure high prices. Well, low prices will cure low prices. And I think we've probably seen a little bit overdone to the downside and maybe a little bit too much pressure. But I'm really, again, trying to get a feel for that cash market because they're different all over the place. But when they finally give up the ghost, then I'm really going to jump in bigger.
All right, cattle, a little bit more pressure there all of a sudden here, 40, 50 points. While feeder cattle are higher. Want to get your thoughts in the hog trade. And by the way, viewers and listeners, I'll give you those prices specifically here in about a minute. Real quick comments in the lean hog complex. Getting up there, the August over $89 again today.
I think that they're probably pretty much done here, Mark. I think there's a lot of factors now going to start to work against the hogs. I think they had their run. I think you're going to start to see some pressure here. Now, I don't know that we're going to go straight down. I don't know they'll mimic what cattle did, but I do think we're going to start to see some pressure, especially with the lower prices in cattle as well. I mean, the balance of protein is going to shift again, I think, the other way. As we used to walk it one way, now I think we're going to look at the other way. So I think overall, the chart tells me that, the markets are telling me that. I think we start to work our way a little bit lower here.
Very good. Todd, thanks for your time as always. It's BubbaTrading.com. Appreciate your comments. We'll look forward to our next visit.
Thank you, sir.
Thank you. Todd Horwitz live from Chicago as promised. Here are the numbers right now. These are live quotes from the CME Group. August live cattle down 7 after a high over 111. We are now about $1 below that now. 110.18 down 7. Now feeder cattle still higher at this moment. August up 27, 136.95 near 137, and they've been over 138.5 at their high. We'll see where we end up in 3 or 4 hours at the close. Hog futures under some minor pressure here right now, although the nearby July is still up 8 points, 86.50. Todd Horwitz maybe says a yellow flag there. Might be running out of steam here. August up to 89.15 at the high today. Right now 88.85 on the August lean hogs, down 10 points. But it would add in there, Janet, that the exports that we sent to China hit a record here during the month of May.
Right.
So 120% more than a year ago.
Growing potential.
Wow. Yeah, and growing more.
Thanks, Mark.
Sure.